This panel was chaired by our editor, Peter Guest, and focused on the investment climate on the African continent with regards to private equity. The focus of the discussion was how the investment climate is holding up in light of the international economic slowdown and what impact, if any, this is having on government policy with regards to maintaining a business-friendly investment environment.
I think it has been a pretty quiet 12 months. It's pretty clear to everyone in the room, I think, that the African economies have been impacted to varying degrees by the global financial turmoil. Remittances are down, companies are struggling with obtaining trade finance, and there are lots of other factors. And private equity investments obviously aren't immune to that. But on the other hand, they should be pretty well placed as well because of the disciplines that private equity managers place on them to withstand the turmoil and come out and prosper. But it has been a pretty quiet year. Having said that, we are seeing in our firm, and I'm sure it's the same with our competitors, a significant increase both in interest and activity in investors looking at Africa and the African economies as places to put their money. And we've heard from the panel before this one as to some of the reasons to that. This growth in the urban classes or emerging middle classes, call it what you will, which is driving a number of areas faster than the overall economies are growing themselves. And I think that is something that has clearly has an attraction to investors. And I think also, they're looking at guys like some of the guys on this panel and some of the other funds who've clearly shown that you can make money in private equity in Africa, that the perception of risk isn't always the reality, and there are good deals to be done. And so I'm quite optimistic, whether it's in the next 12 months or beyond, that things really pick up. I'm quite optimistic about the future. And, certainly in terms of the number of mandates, both on the fund formation side and the deal side that we're seeing, there does seem to be a pickup in activity. And
we see in the immediate future tremendous progress and tremendous opportunities for private equity because Ghana just enacted a new pension plan. And in our neighborhood, what we have is 12 million employees or 12 million people in the economy who are not formalized in any form of pension. So with that coming into being, and if you can take about 30% of that, we're thinking we can raise around $800 to $900 million a year. And with that kind of funds, they'll be begging for investment destination. In addition to that, we also have the influx of the oil, which was discovered recently and is coming on board around 2011, 2012. So Ghana is looking for great opportunity in the immediate future. What problems we have are the skill sets, the experience to run these liquidity that will be flush and looking for destination. So what we think we should be doing is training of some professionalism, bringing some skill set, looking for people who have been in the diaspora, bringing them home with exposure that can assist. So we see a tremendous opportunities in the immediate future.
We haven't seen anything like a reversal or unwinding of kind of reform or civil society. I think, regardless of, the earlier panel talked about some elections, some successful, some not so successful. But the thing that we note about the elections is that you don't have somebody running to privatize the financial institutions, and the opponent is running to to take them all back under government ownership. Everybody is running on reform. Everybody is running on the notion that the reforms have to continue and that the private sector really is the engine of growth. The president this morning, I think, made that, put that in a really nice way. So, we're back to, Miles answered the question on Kenya a little bit differently than I would have. Of course, he had a wonderful historical perspective on the place. To me, the issue was not so much, that, first of all, Kenya was not doing all that great beforehand. It was just that people wanted Kenya to be doing great. But the actual impact was not that significant on the economy. They might have lost 100 basis points. And the Safaricom IPO goes ahead, and most of basically you get a big tent, you pull everybody inside. Maybe you don't like what's going on inside the tent, but that's the politics. They found a way to kind of work together to not abort the growth in the economy and the development. Certainly, maintaining Kenya as an interesting place for people to look at. We have one investment there, now two actually. I think the critical thing is to stay out of the government radar and to be able to participate in a sort of with an entrepreneurial focus as opposed to something that is dependent on the political infrastructure to succeed.
If you look at the fiscal and macroeconomic backdrop, where clearly throughout Africa there is a much more stable and signaled regime which markets understand how the central banks are going about governing. And I think the interesting thing in this recession is actually a lot of African countries have had room to make policy responses, which historically they haven't had because they've been caught between a rock and a hard place. So you've actually seen sensible policy responses. I mean, South Africa recently, last week, dropped exchange controls. I mean, there's those sort of fairly sensible measures which people have got the room to implement now.
One of the really interesting sort of dog that didn't bark in the night kind of situations is you've got Latin America, which kind of found growth earlier than Africa did, I guess. Chavez socialism in Venezuela, in Bolivia, in Brazil, obviously in Cuba, but sort of spreading across the continent. And one of the weird things is that Africa is going through a slowdown in growth, which naturally would be breakfast for socialism, so to speak. But nowhere in the entire continent is anyone talking about socialism, which is sort of weird. I don't know what the reason is. It's terrific for people who invest here, but I don't know if the panel have any ideas why the politics in that way have turned so positive.
The notion that handing over, sort of making the private sector the driver of the economy is no longer viewed as being putting political stability at risk. In fact, the only way you can ensure stability and therefore continuity is to see that the private sector is working. And I think that lesson of being able to trust the private sector as not necessarily being contrary to your interests in perpetuating your own party's activities creates a sense of acceptance which has actually been had the effect of pulling people out of poverty. I think that Africa had a before and after moment with the prepaid SIM card, and I think that Africa is going to have a before and after moment with the delivery of high-speed, affordable bandwidth, and that's in the future. But I think that's going to be a game changer. But what happened with the SIM card, the prepaid SIM card. And you could see it. This is not unique to Africa. And in fact, I think private equity in Africa can sometimes be a little bit simpler than other places, simply because it's coming last, and the pattern is so well established before it comes to Africa that you can actually interpolate the lines. But in the 1980s, when you went to Prague in Old Town Square, there were plumbing fixtures on sale in the storefronts. And building materials, and of course they've now all been displaced by jewelry stores and fancy restaurants. In India in the 90s, when you drove in from the airport, it was Burla cement. That was the billboard. And now, of course, it's blue jeans and telephones. And in Africa, what happened with the prepaid SIM card was that because now 30, 40, 50, 60% of the population is either targeted or about to be targeted. There are companies, legitimate companies, companies that actually value customer care, who want you as a customer. Now, before that, every service you received, you would wait in line all day to pay your electric bill, or you would, have to bribe somebody to get water service. And don't even talk about the election, trying to cast a vote. I mean, there was no response to you could go your whole life basically and not have a satisfactory mercantile experience, a commercial experience with an institution, government or any other kind of major enterprise. Phone companies come along and now they want your business. And they are measuring the seconds you talk by a tenth of a second. Your billing system is so sophisticated. If you get pissed off at them, you just go right down the kiosk and switch SIM cards. And that creates an environment where I think the notion of going back to the bad old days, gone. Nobody wants to go to back to the bad old days. When it's so obvious that a new contract can be engineered that values you as a customer and as a consumer, regardless really of your level of disposable income.